Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 12th of August 2011. This is a daily chart of the S&P 500. We closed on Friday. Still down for the week, I believe 1%. We closed at 1178. This will be the third week in a row, both on a Friday and on the Saturday radio show tomorrow, that we have the overall trend as short, meaning down. Our sell signal took place on Wednesday, the 27th of July, which was a signal to exit at the open on Thursday, the 28th. And again, that open on Thursday, the 28th, was at 1304. We have not had any equity exposure on the long side since then, unless we were more short than long. We have since, as of about 10:45, 11 o'clock yesterday morning, put a couple toes in the water on a counter trend trade in the IYT, and that would be the transports IYT. You guys can see that chart, that still chart on the blog yesterday, the 11th. We got above this area of resistance short term, and therefore we are playing a potential bounce here. If volume, we'll go back to the S&P chart, if volume was to pick up here along with price, we could possibly see a trend change early next week from short to long. But as it stands right now, because of the lack of volume, we have the overall trend again for the third week in a row as short. All we're doing right now is playing a counter trend trade, believing that at some point, whether this is a low or we're going to go down to 1080, 1050 and then pop, that counter trend trade is going to take us maybe and hopefully somewhere between, based on what we see technically, 1250 to 1300. We believe at this point, as I mentioned yesterday on the still chart, that this is a top. There's been enough technical damage done where we believe that for the time being that 1350 for 2011 is a top. Obviously, if we get above 1300, 1330 in that level, that would change our thinking in terms of the probabilities of then breaking out to new highs for 2011. I don't believe that this is a low, but yet at the same time, it may be the low that temporarily takes us to the 1250, 1300 level in there. Let's do this. Let's look at this under a little bit more of a microscope. You can see that on Tuesday, just 3 days ago, during the day, we took out the lows that were put in on that huge down day on Monday. Now, when you take out those lows intraday and then you close above them, often that is a shakeout for those individuals that had their hard stops parked under Monday's lows. So having said that, then the fact that we did close above the highs that were put in on Wednesday, this could quite possibly be the bounce that we're looking for right now. But again, the overall trend based on the volume right now is still short the way we have it for the third week in a row. Let's do this. Let's squish this chart a little bit and let's go to where we think we might stop next in the event that we break 1100. By the way, we put this 1100 in here as support before it hit 1100. Remember, once we said we got through 1200, 1150, 1100 was the next area of support. So where would that put us next? We'd have to say 12 or 1050, right? If we look over here, there's plenty of support at 1050. I think that's where we're going. I just don't know where we're going before that. What we might end up seeing is some type of W bottom, where this is the first part of the W, then we go up, and then the lower right underbelly of the W forms, which could be 1080, 1050 in that level. We shake everybody out under this 1100 area, and then we take off and we make the big run to 1250, 1300. A big, fast, powerful move. Again, we don't know if that's going to happen, but we do have this trend for a long, long time. We see this as being a bear trend right now until we get maybe above 1330. Certainly we get above 1350, we would go all in. What else can I say other than the fact that there's been a significant amount, as we squish this chart, of technical damage done here? So let's look at this as traders and investors, where individuals that did not get out in and around this 1300 level, if we get back up there again, I believe they will sell it. At the same time, when this market was basically in free fall here, for those individuals who were unable to get short quickly, I believe that they will look at this 1300, somewhere between 1250 and 1300, as a level to short, because they might have missed it previously. This could be a short covering rally here as well. Again, I don't think that 1100 is a bottom. It may be a bottom to 1250, 1300. I doubt that. But in the event that it is, I still think we're going to go lower, below 1100. All right. What do I like now? First of all, let's take a look at gold. The gold positions that we have in the limited number of managed accounts right now, very limited, we are hedging. We started to hedge again yesterday morning as we put on the long position in the IYT, the transports, very small position. We started to hedge our gold exposure, not so much because of the margin increase, but more importantly because we thought it was overdone, and also because of this gap here. We think we're going to come down and fill that gap, possibly test support around 160. All right, so that's gold. The overall trend is still long, but we are hedging it until we basically get above the highs that were put in this week. Let's take a look at a chart that I do like right now. With corporate balance sheets intact, lean and mean, I do like the corporate bond ETF LQD. You can see it just closed below the low, or just below the 50-day moving average yesterday. But I do like this chart. This chart is held up. I did put this chart up a long time ago, I believe, on the blog as a monthly chart. And you can see that when we were looking at it then, and I'll be looking at this next week for the managed accounts to purchase, that this is an inverted head and shoulders. We have this long basing left shoulder. We have the head inverted right upside down. And then we have this long basing right shoulder, which is a pretty tight range. I do like this chart. If we look at this a little closer on a daily chart as opposed to a monthly chart, you know, if we get a close above this candle, this high that we put in on Thursday of 113.30, that looks very promising. And then I also like it above the candle, the high that we put in on Tuesday at 113.64. Where would I have my stop? I'd probably park it maybe 4 or 5 ticks below the low that was put in on the 11th, which was yesterday, and that low was 110.81. Maybe we go to 110.71 in that area. But in any event, our percentage back on a stop would be 2 to 3%. What I'd like to do, you guys, is finish off again with the S&P cash, the S&P 500. Again, for the third week in a row, we have the overall trend short. We are playing a counter trend trade here, bounce. We would need to see more volume to consider this to be a trend change. If we break the lows that we put in on Wednesday, which is basically 11.18, we would exit that even if we had to enter again at a higher price. If we push up around 1300, whenever this takes off again, whether it's now or 3 weeks from now in that general area, if we get up around 1300, we will have tight stops and or liquidate the bounce. And then we will look to short, and we would probably take about 33% of the managed accounts money. We would short with our stop right around 1350. For us, that would be a very low risk trade percentage-wise. All right, you guys, that's at Doug McKay, antiwallstreetguy.com. We'll see you next week on the blog. For us, it was a fun week. No stress here. Everybody slept well, and we'll see you next week. Thanks.